All right, hello everyone. I hope everyone had a great trading day, and today is Friday. The portfolio is up $26,376. So for today, I am up 0.35%, and in the after hours, I am up 0.30%. I am briefly up 0.30%. We could take a look at the week here. I am only up 0.41%. For the past month, I am up 4%, and in the past 3 months, I am up 2%. So the portfolio has really been just coasting along. I definitely like some of the moves I've been making, but we're going to quickly talk about the news in the market. The market was doing very well in the morning, and when it struck around noontime, there was a report that came out that China officials were not meeting with the U.S. to discuss the trading war and how to resolve it. So a lot of investors they quickly sold, and that can account to all this volatility right here between 1 o'clock from my time and the significant drop. My portfolio was up $221 before that announcement came out. So the traders and investors are definitely monitoring the trading war very closely, and they are selling off any emotions that they see in the market. Like, if a deal is not reached and they feel like a deal is going to go south, then, traders quickly move money into, more profitable, reasons like gold, the VIX, and they start doing massive trading and swing trading. So the portfolio did very well today. It's really quite surprising because I think the Dow Jones was down 150 points, but it's quickly take a look at what I've been doing in portfolio, guys. There have been some slight corrections. There's I wouldn't even say corrections, just been some slight changes in the portfolio. My buying power was closer to $200, but let's quickly review the portfolio. Apple is at 217 still. They did not have a good day, down 1%, almost closer to 1.5%, 1.50. Shares 10, average cost, you guys already know I haven't sold anything, and now I am only up $381 with the stock, but still a pretty good percentage gain with 21%. I don't really have to go in depth about Apple. You guys know that it's a very great company, and they're going to be around for quite a long time. 3M 166, they are starting to go back down a little bit because of the trade jitters. Right now my average cost is 161. I definitely wanted to buy a little bit lower than that, but I'll take I'll take the 3.5 dividend yield. That's where I bought it at. And total return, I am up $52. So this is a dividend king, but they have been really hit hard by the the trading war. The trading war has brought all the industrials down to reasonable bargains, and for the past year, 3M has officially entered a bear market. So if they were to lose 8% more of their value, it would officially be a crash. So 3M investors are definitely watching 3M closely, and I would say there's been some support level. The support level for 3M is definitely around that 158 mark. You guys can see right here, it rebounded quite nicely, and then it got all the way down to about 155. So it actually went lower than 158, and I think 155, around 155 to 158 is some sort of support level that you can buy this stock at for a reasonable price. So 3M, a dividend king, but very, very sensitive to the news. AbbVie, let's take a quick look at AbbVie right now, and the after hours is doing very well. $73.41. My position, you guys know, I bought 50 shares of this stock at $65.73. The portfolio diversity is starting to go back up only because my total return is up 11%. And AbbVie has really, really been hitting the ball out of the park. A lot of investors are seemingly buying back into the stock. $384. AbbVie is supposedly a dividend aristocrat, but they were really just a spinoff of Abbott Laboratories. This stock is hitting the ball out of the park, guys. This stock is gone up 8% during the past month, and in the past 3 months, it is quite shocking to see that this stock is still down 6%. So they have a massive dividend yield, and investors it looks like investors are really starting to buy up AbbVie here. The opportunity may be gone now because I definitely thought $65 was very reasonable, but AbbVie is still, I would say, a good buy to consider below $80. So it's going back up to $80, and I am really getting some nice capital appreciation with this stock. And not to mention, I will be getting some around $50 dividend, which is actually really, really good for the stock. Shell 59.19, quite the volatility during the after hours. This might spike lower. I don't know if that's a glitch or not, but Shell 59.19. I did take some profits off the table only because I've been moving some stuff around, some minor stuff around, but shares 50, average cost $55.55, and total return 182. So I've said before in previous videos that energy stocks were not doing well. They were in a bear market, and I saw it ExxonMobil. They dropped all the way down to $65. I thought that was a reasonable buy. Occidental Petroleum, I think they took a hit. Enbridge took a hit. All the oil companies fell, and RDSB fell to 7% dividend yield. So that's not something you see every day, not for a company like this. And I definitely said that, that's something to consider if your portfolio lacks an energy stock. I am doing very well with Shell, and I am sitting closer to a 7% dividend yield. So Shell is definitely hitting the ball out of the park here. Great stock. Johnson & Johnson 131.65. They had a good day today. Health stocks are starting to rebound back up. 15 shares at the average cost. You guys know in the previous video, I talked about how I wanted the average cost, at least when I bought Johnson & Johnson, to be around 120. I didn't think it would get that low. I wanted it to get that low, but it did not get that low. But I'm still doing quite nicely with Johnson & Johnson with $42 and some nice capital appreciation. Another one of those dividend kings on the market that was, I wouldn't say they were oversold, but I definitely think that this stock is a giant healthcare provider, and you guys know in several videos I called them the Amazon of healthcare because they're so big. So they have very, very nice dividend yield, and it's just a great stock to own. So NRZ, new residential investment, $15.23. I have bought more NRZ, and average cost now is $14.24, and my total return is up $198 for a 6% gain. I am sitting on a closer to around 14% dividend yield, which is actually, some people might say that it is unstable, but if you dig a little deeper with this company, they have protected the dividend very nicely. They have allowed some capital set aside to cover that dividend, and they pay a pretty nice dividend of 50 cents for every share that I own. I own 200 shares now, and now I will get $100 quarterly with this company. So definitely interesting to see there. I talked about how the portfolio is generating $100 each and every single month, and just with this stock alone, I'm getting $100 for the shares that I have. So I have a goal with this company. I definitely want 500 shares of NRZ, but it's very, very risky, guys. This stock is very, very risky. I've said before that they are a mortgage real estate investment trust that mortgage properties out of banks and all other stuff like that. But this stock is very sensitive to interest rates. So if interest rates are going up, then this stock obviously would do well. But if interest rates are cut, then this stock is not going to do well. They're not considered to do well, but it doesn't really matter at this point because it looks like investors are starting to buy back in. It looks like the support level was around $14 or maybe around $13.75, and investors are starting to buy back into NRZ. So great company, but dividend yield, definitely want to keep an eye. This is a company that you definitely need to keep an eye on. You can't really just leave it in the portfolio and put it on cruise control. You definitely have to monitor new residential investment. So AT&T 3786, doing very well with them. I'm actually surprised that I'm doing very well with AT&T because I bought back into the high. Not too high, but definitely could have got them on sale around $30 or so. But my total return, I am up $140, and this is I think this is a dividend aristocrat. So definitely good stock, but they have their troubles with debt, and a lot of investors are monitoring the debt and seeing how AT&T is going to pay off that debt. So right now, I think the dividend yield, the dividend itself, is very safe. Great company to buy still. I think they're still a good buy if you need a stock like AT&T below $40. Enbridge 35.34. Definitely looking good with them. I'm up $14. Just a stock that I wanted to kind of diversify outside the U.S. I talked about Canadian energy stocks. This is a Canadian energy stock, and I think that I just wanted to pair it up with Shell, just give some more diversification for the portfolio. Pretty good dividend yield. They've been pairing their dividend yields quite safely. So this is a stock that you can definitely buy a lot of. They haven't been doing well, I would say. The past 5 years, their 5-year chart, they're down closer to a crash, almost 30%. But Enbridge, I think, is a very, very good stock to own. Like I said, if you need some diversification outside the U.S., energy stocks, this will be a good pick to buy. So Altria, $40. They have not really been doing well, and this is one of the moves that I have been making with Altria. I had an average cost of $43 in the previous video, but I quickly sold off those shares to put some money into another stock that I'm going to cover. I had 60 shares of RDSB that I slightly trimmed in RDSB to put some more money into NRZ, but Altria kept going lower. It kept going all the way low to $39, and it's a shame that I actually missed $39, but I definitely bought back in here, 25 shares. So the portfolio diversity, I'm trying to keep my portfolio diversity low with Altria because of the extreme risk that they have. There's been a lot of risk with this stock. There's been a lot of concerns with Altria. Altria has not been doing very well, guys. This is a falling knife right now. A crash, a bear market, however you want to call it. It's officially crashed for the past year. It's down 34%. So there's a lot of news about vaping and how people are starting to actually die from these e-cigarettes. And President Trump, he's talking about maybe like banning some of the flavors, I think. And it's just a lot of noise with the stock right now. There's a lot of noise with, people investigating the stock and not investigating the stock, but investigating the company and seeing, how they are doing their safety practices. So I don't know, man. I don't know, guys. This stock is definitely not doing well. It's down, but you'll probably never see these prices ever again if you accumulate a lot of shares. I know I was reading a Seeking Alpha report, and I saw somebody bought like 5,000 shares. It was absolutely insane. But there's been a lot of stuff going on with this stock, and it's definitely a risk. So buyer beware, I guess. Simon Property Group, 155. This is a new stock that I entered into the portfolio. I took some profits. I actually took some profits from Altria, and I sold off all of Altria. I didn't know it would actually go down to $39, so that's why I bought back in. I missed $39, but I got the $40 mark. I'm going to see what it does there. It's establishing new support levels each and every day because it keeps falling so much. But why did I add Simon Property Group to the portfolio? Well, because they have a very good portfolio, guys. A very good portfolio for themselves. They own a lot of good malls, and I've always hearing about Amazon taking over e-commerce, which I do believe. I actually do believe Amazon is taking profits away from the malls, and people are doing a lot more online shopping nowadays. But if you go to any mall, any popular mall, guys, you'll still see people walking around and enjoying themselves and visiting the stores. Don't let the noise fool you as far as like the malls dying. The malls are not going anywhere. This stock has I wouldn't say it's the balance sheet is like, it just blows me out of the water. I wouldn't say that, but it's definitely something to consider. I definitely like what I saw, and I definitely like the dividend yield that they have. I think the dividend yield for the shares that I bought I have an average cost of 154.84. It's around 5-6%. So Simon Property Group has been increasing their dividend over time. I think dividend for the amount that they pay. I think it's $2.10 for every shares that you have. So that's a really, really good dividend. This company is on sale. This is another one of those beaten down real estate investment trusts that that's been oversold, I believe. It's actually been down for the past 5 years, 6%. So, but for this past year, down 13%. So definitely a correction here. Simon Property Group on sale, and I think another stock that I got rid of. I got rid of Iron Mountain. So Iron Mountain, I took some profits out of Iron Mountain. I completely sold out of Iron Mountain to buy some Simon Property Group. And the reason why I did that is because Iron Mountain and Simon Property Group, two different stocks. They're both real estate investment trusts, but the Simon Property Group has a much, much stronger portfolio. They're more diverse, and Iron Mountain has had a lot of struggles as of late as far as their business model. Now, it's a stock that I feel people are buying just for the dividend alone, and I do believe that dividend is closer around 7 to 8%, maybe 6% dividend yield. But Iron Mountain has a business model that I believe is dying, and a lot of people who are buying this stock are buying this stock just for the dividend yield. So one of the things I wanted to talk to you guys about is you have to be careful about as a dividend growth investor, you have to be careful about chasing the yield. If that rings any bells, chasing yield sometimes is not the way to go when evaluating a company, when buying a company, because a company like Iron Mountain has had no growth over the past year, and it's barely had any growth during the past 5 years. So during the past 5 years, it's only up 1%. And, if you look at the Simon Property Group, they haven't been doing super hot themselves. I think that they have actually hit a correction for the past year themselves. But this is a stock that has almost zero growth. And if you look at their business model and compare it to Simon Property Group has a portfolio of diversified malls across the country. Popular malls. These are just not ordinary malls. These are popular malls that, popular people go to and shop. So, all the rich people or the fancy people, these are the malls that are very important, I would say. Iron Mountain, unfortunately, is dealing with records management, and the records management is a dying business, according to their business model of not obtaining data centers. They don't have data centers. They focus more on paper management records, and they're trying to get into data centers. But it's a stock that people are buying for the dividend just alone. And I think that if I'm going to do that, I need to look at a stronger portfolio. Simon Property Group gives me that, so that's the reason why I bought Simon Property Group. And you guys already know about the Power Shares S&P 500 dividend ETF. Very nice capital appreciation. Average cost $38.86. I wanted to go lower so I can buy 150 shares, and it's my favorite ETF. And they have not announced a dividend yield yet, but they will in time. I think they will actually quite soon. So definitely want to look at that. That's going to do it for the portfolio, guys. $26,377. The portfolio has been doing very nicely during I wouldn't say bear market times, but very bearish trends in the market. The market is still unstable. The market is still jittery. The market is still evaluating the trading war and see if we're going to get a deal or not with the tariffs. And they're looking at China's gross domestic product. They're looking at GDP. They're looking at China's how well industrials are doing in China. Everything about China, everything. And investors are looking at that, and if they see any bad news, it's sell time. So they're going to sell, and they're going to get out. Like I said, do your due diligence. And here's my portfolio one more time. I definitely think I like the change that I've done here. I don't really see anything else in the market that that's on sale. It's really been quite sketchy as far as what I've been looking at for my watch list. And here's the reason why, guys, I don't have a watch list on Robinhood, because I use the Seeking Alpha app, and you guys can see what I actually have on my watch list as far as stocks. So I don't see anything on here that's on sale. No. Well, maybe Ford, but I like Ford under $8. This is my watch list, guys. So, I'm just going through it right quick so you guys can see why I don't have a watch list on Robinhood. Yeah, there's a lot of overvalued stuff. KHC, too risky. Too risky. Coca-Cola overvalued. Lockheed Martin overvalued. Lowe's, if it can get below 99 or something around there, I definitely would take a look at them. Maine I like, but overvalued. McDonald's still overvalued. 3M still a good buy, but not right there. Altria definitely a good buy. NextEra Energy, I sold out of them. They are starting to go back up. You got to be careful, guys. Okay, so when you sell, you're selling winners. This is a proven winner, and the stock continues to go up. And I sold. So it's not all fancy. It's not something that you have to definitely sit down and consider when you're doing your selling and your trading, because this is a proven winner and the stock keeps going up. So I sold, and people are saying, well, why did you sell NextEra Energy? It keeps going up. So NNN overvalued. Just I don't see anything. I just don't. PSEC too risky. Nothing. There's nothing on here that I like. I like PPL, but only when they were around $29. I missed that. I actually bought in. Waste management definitely getting interesting here, I guess, but no, they're still overvalued. Yeah, nothing. I don't see anything. Maybe ExxonMobil, but it went back up. Let me know what you guys know about the video, and you guys take care. Have a great day, and I'll see you guys later.